This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, MICHAEL COVEL. Not filtered, raw, honest. That's my passion. There's no earthly way of knowing which direction we are going. There's no knowing where we're rowing or which way the river's flowing. Is it raining? Is it snowing? Is a hurricane a-blowing? Not a speck of light is showing, so the danger must be growing. Are the fires of hell a-glowing? Is the grizzly reaper mowing? Yes, the danger must be growing because the rowers keep on rowing, and they're certainly not showing any signs that they are slowing. That's not half bad for a first read through. You know what I mean? That is from the original Willy Wonka and the Chocolate Factory. And I think Gene Wilder is, he's on that boat and he's screaming that like a maniacal person. But you'd have to go back and reread it. So before I introduce my interview today with Tony Bazile, a trader who specializes in trend following on stocks, I wanted to make a little announcement because I just got word today from my editor at Wiley of this nice article that appeared from my new girlfriend, Pauline Skypala, I believe is her name. And she writes for the Financial Times, and she has written an article. It's a review of my little book of trading. And I'm so excited because, hey, it just allows the discussion and the debate to get going. And it's called Secrets of Winning Systems Remain Hidden. Let me just read the first paragraph because I think this will give you an idea of where it's going. It says, quote, homespun investment wisdom does not come much cheesier than the Whipsaw song available on YouTube. Sung to a bluegrass tune, and imparts the trading philosophy of Ed Seykota, who is regularly described as a legendary trend-following trader. His advice is simple. Ride your winners, cut your losses, manage your risk, use stops, stick to the system, file, i.e. ignore the news. The same list could also be used to summarize the lessons MICHAEL COVEL seeks to teach in the little book of trading. Damn! I mean, just throw it away. I mean, now, Pauline. See, now my theory is I think she has a crush on me. I really do. I think she has a crush on me. But I have to thank her. I feel like I got my bouquet of flowers today. I feel fortunate because you know what? If they're talking about you, if they're swinging at you, if they're taking punches at you, you must be doing the right thing. So, I swear, I might not have felt this way 10 years ago, but when the Financial Times reviews one of my books and they slug me square in the kisser and they just punch the hell out of me, I'm just sitting there going, but thank you, sir. Can I have another? Please hit me again. Can I have hits like this all day long? Okay. Between introducing with Willy Wonka and the Chocolate Factory and I don't know if that's a diatribe, but talking about this article, go read it. It's great. I love it. Let me get into the point of this podcast, which is interesting. Frankly, one of my favorite ones, because I think it's Tony Bazile, trend following trader, specializing in stocks, great story and a journey. And I think you're going to see, especially this kind of a slow build, don't fall asleep. Not that you're going to fall asleep. Tony's a high energy guy. But stay with it because there's a few twists and turns and there's a few unexpected, trend following, surprises that pop up. So I think you're going to enjoy this and, stay tuned. More to come. I want to welcome you to the podcast today. I think like all of the podcasts, you're going to find something similar, but something different. And my guest today is Tony Bazile, and Tony is a fund manager, and it's a relatively new firm. But I think the more interesting thing about Tony is going to be the journey and understanding the journey that he's gone on, because it reminds me a lot of my situation where there's these unexpected connections that happen along the way. And if you don't follow those connections, you might not ever get to the point where you really want to be. And so, Tony, is that a fair assessment of your life in a nutshell?
Yeah, absolutely. I mean, no question. There was definitely connections that I made, and just people that I met at a very young age that have brought me to where I am today. So,
well, let me jump right in, because I think one of the most interesting bullet points that I think I can bring up, and I'm going to have to find out what this means, because I've never had anybody tell me that they're a former professional water skier.
Well, I grew up down in Orlando, Florida, and I went to the University of Central Florida. And while I was in college, I just, water skiing was something I was good at, and it was a little crowd that I kind of hung out with, and wasn't something that I set out to do. But when you're good and people, are offering to pay you for it and buy you plane tickets and allow you to travel around the world, it's kind of hard to say no. So, I did that for a few years. It's great.
So they literally paid you for this, and they paid for that's very cool. So
I mean, when you get the endorsements, the whole deal. You get clothes and shoes and water skis and wakeboards and the whole deal. I mean, to me, it was more of the experience of being able to travel. Right, I didn't travel a ton growing up, and when I realized that we're around the country and we're going to different water ski contests and we're going to Hong Kong to do demos and stuff like that. I mean, somebody paying for my plane ticket and allowing me the opportunity to go do that stuff was just priceless.
Okay, there was jumping involved here, I assume.
Well, I was actually a wakeboarder, so it's kind of like snowboarding behind a boat, right? Okay. Back in the early days, and there wasn't a lot of guys that were doing it. So I really saw the thing go from nothing to something. And so,
was there any jumping? I mean,
a lot of jumping, a lot of flips.
So what kind of distance are we talking? Max distance?
Well, so this is more tricks. It's more snowboarding. It wasn't distance jumping. Okay. It was more, we do 10 tricks, flips, basically, flips and spins up one way and then back down the other way.
And how old were you when you were doing this?
I want to say I started when I was probably 15, 16 years old. I couldn't drive a car yet, that's for sure. My sister used to drive me over to her boyfriend's house to go watch, so relatively young.
Well, that's very cool, very cool. Well, listen, paint for a picture for me your first market experience. What's the first thing you did, the first trade, the first whatever? How did you start this ball rolling where you said, gosh, someone's making money in all this and I want to make money?
Well, so I mean, you mentioned connections. So there was another professional water skier. He was a little older than I was, and he was endorsed by the same company that I was. So, that meant that when they booked plane tickets, they booked our seats next to each other. When they booked hotel rooms, they booked our hotel rooms next to each other. And this guy was constantly reading books about trading and options books. And, now we're getting into the mid to late 90s, and we're getting the run of the tech stocks. And just watching this guy short AOL puts and just bring in money is what really, got me going. I mean, we'd be sitting out on the dock water skiing and practicing, and this guy had a little trading desk set up, and, he's out there shorting AOL puts and making money. And I'm sitting here thinking, man, this is, what an opportunity. This is great. So, that connection was what really got me interested in trading.
I mean, so you're roughly in your 20s, I'm guessing,
and he was probably I want to say late 30s, maybe even early 40s. He was quite a bit older. And a very intelligent guy. Had been trading for a long time. The guy's a legend professional water skier. His name's Carl Roberge. So anybody who knows the water skiing world knows who he is. So he was a good older guy to be traveling around with, and he had experience trading, and he was the one that really got me fired up about it.
So, did you have a little success early on, or what?
Yeah, absolutely. I mean, my dad saw how interested I was in trading, and he gave me a little bit of capital to start. He paid for me to go to a bunch of options seminars and just make sure that I had some type of a semi-legitimate background on the thing. And, during that run in the 90s, I made enough money as a young guy to be dangerous and to think I was dangerous and kind of think I knew everything.
This is before March of 2000.
Oh, yeah. Well before March of 2000.
Okay.
Well before that.
And, well, so what happened when the bubble popped? How did that affect you?
So I had made a lot of the money that I'd lost, right? So it was a good experience. So I made a lot of money and I lost a lot of money. And what it did for me was it just showed me opportunity. It was what I thought was a lot of money at a young age.
Okay, but I got to ask you. So you make a lot of money during the bubble. A lot of people did. Coming out of it, and when you say you lost, what percentage of the money did you make during the bubble did you lose coming out of the bubble?
Probably at least half.
At least half. So emotionally, were you the type of person that was sitting there, like, what were you feeling at that time, or was it you just kind of shook it off?
Oh, I totally shook it off, because it was more exciting to me that I did it then, obviously there was days where it was difficult to trade and to watch money disappearing, but man, I knew at a young age, I knew when that happened that there was some serious opportunity, right? The money that I thought that was big, that I saw come and go, was nothing relative to what guys were doing on a daily basis.
Yeah, I think that's probably one of the things that people sometimes, I think everybody starts to feel like if it's right there in front of you, you've got to grab it right now, and it might not come back, as opposed to what you're saying, which is all I wanted to see is that there was a taste of the flow. And if I knew that flow existed out there, then maybe the current situation, up 100, down 50, so what? It's the future. What are the future opportunities of that flow?
Yeah. Absolutely. At this point, I was trading directionally. I was trading options, both, I wanted stocks to go up and I wanted stocks to go down. I was buying puts and I was buying calls as well. And I really, literally at this age, I learned that I can buy something for $1 and I can watch it go to $3, $4, $5, $6, $7 and sell it. I mean, to me, that was tremendous.
What was the strategy? What was your strategy at the time?
Just purely technically based for the most part. The gentleman who got me into trading, he loved to short puts, and I just never really understood how he had to sell a lot of puts to make a lot of money. And it was kind of the opposite of what I was comfortable with and what I really liked, because he's selling things at $1 hoping they go to zero, or he's selling them at 50 cents and hoping they go to zero. Well, the problem with that is what happens when they go to $3, $4, $5, $6? You've got a tremendous loss on your hands. Right. So, while he's shorting puts, I was constantly doing the opposite. And that actually helped me during the bust, because when you've got a defined risk, you can only lose what you put on the table. If I buy a call option for $1, I can only lose $1. Now, while I might have seen that dollar go from 1 to 5, and it retraces to zero, yeah, there were some profits that disappeared, but I lost that dollar still. And that's kind of what kept me from just being completely wiped out during that period.
So you're a young guy, you're doing your own thing. You got a pretty cool job, water skiing. You're somewhere in Florida. I imagine there are tremendous numbers of very attractive women in very limited bathing suits. So I'm already envious of this particular gig. But at some point in time, it sounds like you wanted to. Maybe it was even like, hey, I want to find somebody who's bigger, badder than me, someone who's been around the block, somebody, a place where I can find some mentoring. And why don't you tell me which direction you chose?
Well, so actually, I have to give all this credit to my wife today. I mean, girlfriend at the time. We were here and absolutely living the dream. Right, we're in Florida. I'd never water skied. It was never part of the game plan. It was just something I was good at, and like I said, they paid me, so let's go ahead and do it. I was going to college. I was one of the only guys on the professional tour that actually went to college. I mean, that was my primary, goal. And I did miss out on a lot of things because I was going to school, but, I was always kind of looking to the future. So long story short, we spent a little bit of time in Seattle because the company that endorsed me actually moved me out there, and I worked in-house, the headquarters of this water ski manufacturing place, doing sales and, a little bit of everything. I knew all the athletes. I knew kind of, the whole aspect of the entire business. So these guys moved me out there. I probably spent 6 or 7 months, at a desk for the first time in my life. And that's when I realized, man, 90% of my time was going to trading. I mean, even my bosses to this day, they knew instantly that I belonged doing something like that, right? More to that degree. And at this point, my wife just her girlfriend at the time had an itch to go to New York City, and I wanted nothing to do with it, right? I thought I knew enough. I had enough experience trading, so I thought. And she was going with or without me, so I figured she was too good to lose. So I, went to New York under one condition, and that was that, I was going to work on Wall Street, and I thought the best way to work on Wall Street was to move right onto Wall Street. Not really knowing much. I think I'd been to New York once for a couple of days, and wasn't in love with the fact. So, we rented a place directly behind the American Stock Exchange. And pretty much because she made me, and I chose the spot to live. She already had a job in finance, and in fashion, and I kind of had to figure it out, right? I'm going to figure out how this kid from Florida, who's been a professional water skier, is going to get a job on Wall Street. Tougher thing that I kind of anticipated. So I ended up standing outside the back of the American Stock Exchange for about 6 months, handing out resumes in the morning, at lunch, after work, shaking people's hands, doing whatever I could do to meet people, with literally no luck at all. Finally, a guy comes one day and he says, "You're absolutely pathetic." He goes, "Come on upstairs. We're going to interview you."
It's funny. I had a guy email me the other day, and he wanted an internship whether with my firm or somewhere. And I said, my first response was, I said, well, it's kind of going to be a lot of door knocking, and I don't really have a name or a particular situation or an opportunity I can give you right now. And it was literally like one email back, okay, thanks. I'll do something else. It was like, his sum total of effort was like, I'm going to send an email to this guy Coveil, and that's it.
Yeah, totally.
That's it.
I had seen the inside of the American Stock Exchange once, and I mean, the excitement, the screaming, the yelling. I mean, to me, that translated into money at the time, right? I mean, I got one glimpse of it, and I was like, man, that's exactly where I belong.
Tell me the guy you ended up working for.
So the guy was just a guy who worked at a company. It was just a prop trading firm. They were specialists on the Amex, market makers and options. Right. So, I got hired to do this job, and, it was tough. I mean, I'm a kid who grew up down in Florida, and I'm up against a lot of Ivy League kids and, pretty smart people. And I think I know a lot about options at this point. Well, come to find out, I really don't know much about pricing options and volatility. And, these guys aren't trading directionally, right? I mean, I get in here and these guys are making market and options. If you want to sell 100 lot of, GE calls, they're going to buy it, but they get to determine what price they buy it at, So I got a real quick learning lesson, the fact that I didn't know everything about options. And learned a lot about, the infrastructure of the market and how things trade and why things trade and why they're priced that way. And, incredible experience. Great place to work for sure. It was exciting every single day to go in there.
Well, let me move you forward a few steps. So at some point in time, you've got this kind of this options experience. But there is an evolution. There's an evolution that starts to take place in your world where you start to get the sniffs of trend following. Why don't you speak to me about that evolution and some of the early lessons?
So I guess the best lessons I had then was I finally made my way over to the New York Stock Exchange. I knew that I didn't want to be an options trader forever. Luckily got hired at a job there with a gentleman named John Mulhern, and this guy was, one of a legend on Wall Street. He was partners with Boesky back in the 80s. My options experience is what ultimately got me the job there, because they were specialists on New York and they hired me in. My primary job was to, I spent several months down on the floor getting to know the specialists. And what it allowed us to do in the options world was take down huge trades on the floor of the New York and offset some of the risk using options. So that was kind of my primary role. Now, the secondary role was he gave me a prop trading account. Right, he set me up with $5 million and kind of said, "Hey, here, do whatever you want, make money, right? Here's a mouse and a keyboard and a screen. You got to make money." So, there was a lot of pressure to trade because you had a mouse and you had a keyboard, and that's what you did. That's what we did every day, whether it was a good day, a bad day, summer, lots of volume, little volume. I mean, you had pressure to trade. You were forcing trades, and you got to keep in mind that this was my secondary job, was this prop account. And so, I really realized that I needed to come up with some type of a process. I couldn't stare at the screens all day because I was hired to do my primary job, which they expected me to do, but at the same time, I had pressure to make money in my prop trading account. So, I had to come up with something that was more of a procedure that allowed me to take my eyes away and allowed me to be disciplined.
What's the first thing that made you say trend following? First memory, first experience, first read of it, first trader of it.
Books.
Who? What?
Reading books. Probably reading your books.
Okay.
Probably reading about Dunn. And
that was not a paid advertisement. I did not know that in advance, honestly.
Probably didn't mention that, but there was a couple guys just reading everything that we could and hearing about these risk profiles.
What year are we right now?
2003.
Okay.
2003.
Okay, even maybe a year before my stuff. So you're in that space. You're digging it up. Well,
turtle trading, right? It was
right.
We heard about the turtles, and we're reading about the turtle, and that's kind of what really got the ball rolling. And then, that's right when you came online. Then, so it was funny that we started reading all your books. There was a couple of us that were really into it.
Yeah. Well, let me get to some of these particular lessons. And there's one line that I love that you have here, and I just want you to just explain what it means from your perspective to somebody out there who's uninitiated. And you have one of these lessons from John where he is a very disciplined type line where it said, quote, "Sell the position. I'm long, not proud."
Yeah, he would constantly say that when we were in positions that were losing money. And he wasn't necessarily a trend follower.
But explain that though too. Sell the position. I'm long, not proud. I don't know anything about the markets. What does it mean?
Ego out of this trade. Get rid of it. We're losing money. I want to take my ego out of it. Get rid of the trade immediately. That's what he meant.
Gotcha. I mean, I hope people are following that. It's such a beautiful, simple thing that's just loaded with wisdom, right?
Yeah. I mean, I loved hearing him say that, right? I'm long, not proud. He'd say it all the time. It was great.
Roughly at this time, though, you told me, you said, I got to see this in person, and you made your way to Stuart, Florida, apparently.
Yep, there was a weekend where I'm reading about Bill Dunn and Dunn Capital, and it's like, man, do these guys really exist? This is incredible. And I got on an airplane. I called these guys, told them I was coming. They probably don't remember it to this day because it was a very weird experience for them to have some guy who was on the New York Stock Exchange, asking what they did and interested in what they did. But I had to see if this was for real. And I got on an airplane. I flew down, and they're there. They're in a strip mall in Florida. You walk in, there's no screens, there's no screaming and yelling. It was the complete opposite of what I was used to. And I sat at a conference table. I want to say it was with his son and a couple of other guys. And I'll be honest, we didn't have much to talk about. We just kind of looked at each other, and they were enamored with the fact that there was somebody who had a presence on the New York Stock Exchange that was even talking about them, much less knew who they were, right? I mean, we sat around and laughed a little bit, and it was more for me to be like, man, these guys really do exist. This is for real.
Yeah, no, I still remember the first time I walked into that office. That was like, gosh, I want to say 96, but it was that same kind of experience. It was like, wow, this is just you just never get past the idea of, not that they were casual in what they were doing, because clearly very disciplined, organized, successful firm with a track record that goes back so many decades I can't count, but there's just a casual way, and that just always struck me. It's like, well, because it was so much different than the floors that you're describing in New York City.
Yeah, absolutely. Complete opposite, right? I mean, I went from where screaming and yelling, was good, and we like that, to looking at these guys and looking at their returns and going, man, we're not making that kind of money, and they're not screaming and yelling.
I know you had a bunch of things that you kind of described as your defining moments of why you wanted to be a trend following trader. I just want you to take one of them and say the most important defining moment for you on why you wanted to become a trend following trader.
No question. Beginning of 2003, I'm working for John Mulhern. There was a huge reversal day in the market. It must have been somewhere in the beginning of 2003, if I remember correctly. And John was going on vacation, I want to say for about a week. And it was the last couple hours of the day before he was going to leave. And the market just reversed tremendously and had a huge reversal day. And we just started piling into stocks, futures, options, everything that we could, right? John just buy everything. I didn't even know at the time the firm had that amount of capital to deploy at one time. And we go out that day, just more than we've ever been. And John's going on vacation the next morning. I remember he walks out kind of smiling like, okay, you guys can handle this. You're good. Next morning, the market gaps up probably 3%, 2-3%, and we're all kind of looking at each other going, what do we do? We're up millions of dollars. What do we do? What do we do? So immediately we start selling. We start selling everything. We've probably sold 80% of our positions that first day. Next day, we all come back in. Same thing. Market's up another 2 or 3% on the open, rallies the whole day. We flatten everything. We're completely flashed. We made millions of dollars. We're all smiling, looking at each other like, man, what a trade. That was great. Well, John was gone for, the whole rest of the week and days after that. And I think the market went up pretty much every day that he was gone, and probably for the next 3 weeks after that. And when he came back from vacation that day and looked at us, when he found out that we had sold everything on the first 2 days, he was just furious. But it was that, we had no game plan. We had no exit strategy. We had a lot of smart people with a lot of experienced people. We had a lot of capital to trade, and we didn't really know what we didn't have a game plan of when we were going to exit this. It was all decisions that were kind of made on the fly. And that was one of the days. It was like, there's got to be an easier way. There's got to be a methodical process that I can, repeat time after time and not have to be put in these situations.
Well, you already knew. I think you already obviously are aware of trend following. This was just one of those defining moments where you said, maybe I need to make the shift.
This is it.
Yeah.
That was it. This is it. Like, okay. Man, this is it.
Well, I think you have a pretty cool shift. And once again, I think for anybody that's sitting out there listening to this story, listening to Tony's story, it's like if you want to make excuses for not being able to find opportunity, you can. And if you want to imagine that life goes in a straight line, you can imagine that fantasy too as well. So here's this great shift. And, I think it's fair to say, and you told me this would be fair to say, that if somebody looks at, like, for example, my second book, The Complete Turtle Trader, and the last chapter, chapter 13, was of Salem Abraham. And Salem Abraham got his start because he met Jerry Parker. And Jerry Parker got his start because he was a CPA in Virginia and he answered a one ad for Richard Dennis. So I think it's safe to say, I've met Salem. Salem would have been successful no matter what he did. But I think it's safe to say he might not be where he is today without Richard Dennis. The whole chain reaction that follows. Now, that's not taking anything away from anybody. It's just kind of like looking at the scenario. And I think at Tony's situation, so he's going to make this transition. I want him to talk about it, but where he ends up at a place called Graham Capital. And Graham Capital is run by a guy named Ken Tropin. And you can correct me if I'm wrong, Tony, but I think back in the early 80s, Ken was with Dean Witter Futures, I believe. And Ken was like, he was like the maestro of helping this nascent managed futures CTA trend following industry, where he was one of the few brokerage firms believing in guys like John Henry and Bill Dunn and Gary Davis at Sunrise Capital. And so Ken eventually made his way to being, I believe it was president of John Henry's operation. So they ended up teaming up. Ken was with John Henry forever. And then Ken broke off and has started Graham Capital, and Graham Capital has been a massive success. I don't have Ken's brokerage statements, but I think you could put checkbox and say billionaire there. I think it probably exists or pretty dang close to it. So anyways, I think it's safe to say that even though Tony had these experiences up until this point in time, if the current owner of the Boston Red Sox did not exist, we might not be having this conversation today. So that's that long setup to let you tell us how you made your way into meeting Ken Tropin and working at Graham Capital.
Well, so it was, while I was on the New York that I really did start to transition my trading into trend following. And, I didn't have any experience in commodities or currencies. And I said, this can work. This can work in stocks. Everything I've read tells you that it's what you do after the trade and not necessarily why you got into the trade, right? 90% of your success is after the fact in money management and risk management and not necessarily your entry. So I started doing this on the New York, and John Mulhern ended up passing away, and we had tremendous success doing it with his guidance as well. And when he passed away, I was like, man, I got to get this out here. I got to get this to funds. And, we took what we were doing and we kind of shopped around, and Graham showed some interest, and it was, clearly a fit. I heard of these guys.
Hold on. Graham showed some interest. I mean, you had to do something for them to show some interest.
It was a heck of a process as far as interview process. And, it was obviously 3-4 phone interviews before you're even allowed to step foot in the door. Right. But I mean, everything that we did was stuff that I had read about guys like Ken Tropin and John Henry and what they did as far as buying strength and selling weakness and, predefined risk and volatility-based position sizing. And, I basically used what they did and applied it in my own method to stocks. And so, when Ken saw this, or when the guys at Graham saw this, they were like, okay, this is interesting. What I did different was I had a discretionary entry because I didn't have the capability nor the means to back test. There's 7,000 stocks listed at any given point. I didn't have the capital to take positions, and I just said, what? If the entry is 5 or 10% of my success, well, I'm pretty good at picking discretionary entries anyway. We're going to start trading like this.
Let me ask you before you go more into the strategy, because I think it's an interesting experience you've had, and I'm not saying you take it for granted, but I know sometimes that, and I don't take for granted who I've had a chance to be mentored by and to learn from, but the fact that you had this access to Ken and his insights, it's a pretty cool educational experience. So, and I know one of these great lines, and I'm assuming this is from him, I'm good because I know that I don't know which way markets are headed, end quote.
Absolutely. That was in probably right after I got hired. And, Ken was always very open to, bouncing ideas and anything that you wanted to talk about. And, the first time that I met him in his office, it was intimidating. I mean, you're in a castle in Connecticut on the ocean, and the guy's asking, who are you and where'd you come up with this stuff? And, by the end of the interview, once we talked and I said, look, I've done what a lot of the CTAs do and I've kind of applied it to stocks, that's when we really had genuine conversations. And that was one of the lines that he said, I'm good because I know that I don't know which way the markets are headed. And when you're sitting in that building in Connecticut and you got a billionaire that says, that's telling that to you, I mean, that was another one of those moments that was like, man, this is incredible that we're on to something.
It's like those words are tattooed on your forehead, seared into your gut.
It's the opposite of what anybody else on Wall Street has ever said. Everybody else is predicting the future and they think that they know where everything is going. And I've got a guy who's a billionaire in a castle in Connecticut telling me that he doesn't know where the market's going. Right? And I was just like, big smile on my face.
Yeah, those moments, it's I can't say you get goosebumps, but it's something like where you're sitting there and you're like, I'm one of the few people in the world that's learning this lesson right now. And this is just a really cool experience.
Absolutely.
And because you can tell people, you can explain to people trend following. I can too. And there's a lot of people out there that don't ever have that experience per se. And I know plenty of friends who run trend following funds who've never had that experience necessarily. They're just kind of like lone wolves out on an island doing their thing. But I have to say, having that extra experience where one of the guys, and there's a handful of them, like Ken, does that, is emotionally changing.
I think it's probably what's kept me going. I mean, obviously he would have never brought me in there if he didn't think that I was headed in the right direction. Do you know what I mean?
Yeah. Yeah.
So, every time that, when you do use that discretionary entry, I mean, so the problem is you still have that human component and it enters back into it. And then there's periods where it gets very difficult. So to have a guy like that be able to work with you, and to continually, say things like that, yeah, it's a tremendous advantage.
Now, is there anything off the top of your head, any other kind of interesting lessons or experiences or statements that you took away from him that really kind of stand out with you?
There's a couple, I'd say. I mean, one of the things that Ken used to always tell me anytime we'd go through rougher periods was it's a marathon and not a sprint. It's a marathon and not a sprint. I mean, there's a couple, Ken always had a few things that always stuck with me, and that was definitely one of them. I was listening to one of the interviews that you did with Tom Basso recently about buying CTAs on sale. And, at the time, I didn't know that this was happening. But now that you look back and you see, you're talking to Ken or he's walking around and the firm's in a period of a drawdown and he's, walking clients in off the ledge because you're in a drawdown. And to hear Ken say, man, I've been doing this for 20 years and I've still got to tell these people that this is the time to invest money, right? These guys want to pull money out of our fund and this is when they should be investing. Now we're up to 2005 and 6. When you're heading into, what we all know now of 2008 as being this crash where these guys, did extremely well. So at the time, I didn't put much weight on it. But now looking back to hear those words coming out of him, like, I've been doing this for 20 years and I'm talking people in off the ledge when they should be putting more money in.
Yeah, it's and like I said, you made a good point that I think if people haven't listened to it, they should check out Tom Basso's podcast episode because I think Tom makes a really good point with that. Let me jump you into you're an equities guy, so you're looking at trend following on equities, and it's kind of interesting. There's been a couple different people that I've talked to, both on podcasts and either just conversations about this, and it was something 10 or 15 years ago, there was the word out, well, you just can't, trend following just doesn't work on stocks, can't do that, even though trend following started on stocks back in the day, Livermore, Donchian, et cetera. Futures just became a great instrument for it, but that's just an instrument. The concept, the philosophy of trend following is not instrument specific in your case in point of this. So why don't you talk about some of the idiosyncrasies of trend following with stocks?
The biggest one, no question, is just the sheer number of stocks that are listed at any given point. I want to say there's between 6,000 and 8,000 stocks that are listed on exchange right now today. Available for back testing with our research, we have an excess of 30,000 stocks that we can look at over the course of the last 20, 30 years that you can back test. And to me, this is a big difference between what I do and what the guys do that are CTAs that have a defined, there's only so many commodities, there's only so many currencies. And it just, it's a completely different problem. You've got a lot of stocks and you got a lot of correlation, right? And so that's one of the biggest issues for sure.
Well, yeah, it's well, go into it more though. Talk to me more about some of the for people out there that want to, they've heard the I don't know what I want to say, the old wives' tale, the trend following just doesn't work on stocks. I mean, I still get these emails, so address that person.
It works on stocks. I think you got to have a methodical approach that you can repeat time after time. Just like position sizing, just like entries, just like exits. I think the stocks are the same thing. I think you got to figure out, this is the approach I took. I learned, what struggles there were using a discretionary entry, which led me to the fact that, we can do this. We've just got to figure out a way that's methodical and it's not based upon my discretion. And how we can make it work with a large number of stocks. When I did this a lot at Graham, I'd take no more than 15 positions aside just because the amount of noise and news and things to keep up in the stock market was difficult to handle. I couldn't increase it to 30 positions long and 30 positions short. It would have been an issue as far as, getting in the positions, getting out of the positions, moving the market, different liquidity problems. There's a whole slew of things that you've got to take into consideration, when you're looking at stocks relative to currencies and commodities.
I haven't asked you this, but we should probably address it because I kind of just went by it. So you're at Graham Capital. Your quote boss is Ken Tropin. That's probably a pretty good environment to be in, as you said, at Castle on the ocean in Connecticut. Sounds good. But I think there's I'm just guessing here, there was something else driving you, and I think this happens with most people that want to try and make it in this space. You can take a job working for the man, but you're never going to be the man. And as long as you work for Ken Tropin, you're never going to be Ken Tropin. So if you want a chance at being Ken Tropin, you could take the experience and move on and take the entrepreneurial stab at it yourself. Would that be a fair assessment of what you did?
Yeah, I think right away. You can obviously they pay you very well, and they give you a beautiful salary, and they give you a great cut of what you make. But it doesn't take long working at Graham to see a Castle and to see the cars and to see all the stuff to say, man, there's a lot of the guys here and a lot of the systems that are making the money, but Ken's making a lot of the money, and so I had it in me.
But right, we're not complaining about that. Rightfully so. It's his thing.
Absolutely.
Yeah.
And a great environment. But there, I had it from an early time that I always just, you either kind of have it in you or you don't, I think, right? To kind of go out on your own. It's different when you go out on your own and managing money for other people rather than just for one guy. To me, there's a lot of people, it's a lot easier to just have to kind of deal with Ken or with your boss and his money, right? This guy understands it. He understands that you don't make money every day, and he understands what you're doing. It's a hell of a lot easier to explain to a guy like that why you had a bad day rather than to a client who might not necessarily have the background or the understanding that somebody like he does. So it's a whole different ballgame when you start managing money for other people.
I'm not saying that you viewed it as a stepping stone from the moment you got the job, but this is how Wall Street works to some degree. People are, there's the king of the castle on a particular firm, and there's always people that will stay for the full duration, but then there's other people that will do well and move on, and that's how it works. David Harding has moved on from several different things, but what's interesting, and I don't know if anyone's ever asked you this, how did you disguise the fact that you were an entrepreneur to Ken?
He was, I don't think I had to. He was so much bigger than I was, and he'd be doing this for such a long time. I was the youngest guy on the desk. There wasn't really any disguise, right? The guy, when I was there, I want to say they had 5 billion up to 7 billion.
So he was at a stage in his life where he viewed it as like, well, there's no real threat here, and hopefully he can help me make money.
Absolutely.
Yeah.
No question. If you're at a place like that, and I had never managed the amount of money. I started with a $5 million account. I was on the New York. I had really never managed the amount of money that these guys were throwing around. I mean, when I've got guys behind me that are trading currencies, and with the click of a button, they can put $50 million to work, right? For me to put $50 million to work in the stock market takes quite a bit of effort. And I gotta worry about liquidity and moving stocks and which stocks you're going to buy, and whole different ball game. And, those were all the lessons that I learned about scalability. And, if I couldn't manage $300-400-500 million at a place like Graham, I was, almost useless to those guys, because their bottom line is so huge, but a lot of great lessons about scalability. And that was when I really knew that I had to make this a real trend following, fully automated, fully systematic strategy that was scalable, and make some changes and not have discretionary entries. And that's what I've spent a lot of time the last couple of years doing.
Well, that brings us up today with your current firm, breaking off, and you've got can't talk this morning, Intrinsic Capital Management. So tell me about where you are today. What is the model of ICM?
Well, today I've collaborated with a gentleman named David Frakes. He's got a very similar story that I do. He's worked in this, he's been interested in trend following, and he's worked at the big funds. He's worked at Millennium, Carlyle, and, he's got experience managing a lot of money, but he has more of an educational background. He's got a PhD in bioengineering. He's got the MBAs. He's got everything that, on paper is fantastic. But what's really important about Dave is that he's got a passion for the markets. I've met a lot of smart guys. I've met a lot of guys that are quantitative people, and there was a lot of them at Graham. But you've got to have that background in the markets to really, be able to take that somewhere. And so Dave and I have collaborated on a strategy, and we've took all the things that we've learned over, 10, 12, 13 years now, and all the issues that we had managing a lot of money for other people. And, we spent a good year solving a lot of those problems and building a collaborated strategy on how we could, solve these problems and offer a product to people.
Trend following on stocks.
Trend following on stocks.
What's the biggest thing? I'm Joe Q, investor, sitting out there, and you're sitting down with me and you're pitching me on the idea of your firm and the unique aspect of it. Give me not more than 3, 1 or 2 bullet points. What is it about trend following on stocks that you're offering that's really kind of different, or is really adding value that they might not otherwise be getting doing whatever else they're doing?
Well, it's, definitely the systematic approach. It's the longevity of what we do, right? Nothing is, we don't sit around and predict the future. We don't, my longevity is not determined on how I feel today, or whether I'm hungover tomorrow, or whether I had a fight with my wife the next day. And, my decision-making ability does not control what we do. We've created something that's repeatable, that takes that emotion out of it, and that can be done for a very long time. And we spread the money out. I mean, essentially, we've created kind of an active index, right? We've got holding periods of about a month. We've got the ability now to take, several hundred positions. We figured out how to size these things and kind of adjusted some of the volatility, sizing positions, to accommodate spreading this out over a lot of names, so people get diversification and you get the inherent, large number of names. And it took a long time for Dave and I to sit down, because I'm a guy that used to take 15 positions aside, and he's, well, hey, I want to take 200, and Dave proved to me that if we can capture the significance across hundreds of names, that's much more powerful than doing it across 15. And now you want to talk about the entry being, a key to this thing. I mean, now we're really, minimizing that even more, right? So, that's the one thing. I guess the other thing that we do very differently is, we've dealt with correlation of stocks. I mean, you hear a lot of trend followers say how stocks are tough because everything's correlated. Well, if you look at it, there's an inverse relationship between the correlation of stocks and the price of the S&P. So what we did with that is we took that and we said, you know what, we're going to be stock pickers in essence on the way up, right? When stocks are less correlated, essentially when the market's going up, not everything's going up, and it pays for us to come up with a process that chooses those couple hundred stocks that we determine to be long. And when all of our short exposure, on the opposite end, we trade the index, just like the CTAs do, right? They trade index futures on the stock market. So with that inverse relationship between the correlation, I mean, it just makes a lot more sense to not have to deal with 100 positions on the downside, to not have the buyout risk when you're shorting stocks. And, it's a proven approach. It's just, very interesting how we put it together.
Bulls take the stairs, bears take the elevator.
And that's part of it. We say that all the time. It's like when the market's going up, it's a slow grind. You're going up the stairs, and if anybody who's watched the market the last decade, when things are going down, they take the elevator every time.
It's funny. So I've had some conversations, and like I said, we've already brought the idea that there is this view that circulates that once people even understand trend following, they say it doesn't work on stocks. But I have talked to quite a few established CTAs, and I'm not saying there's any one way to do it, but I have had folks tell me over the years that they would trade equities from a trend following perspective, but just long only.
Okay, well, yeah, that's one approach. So, essentially, that's what we're doing. We're running two systems, one that's a long-only system on stocks, and the other one that's essentially a short system trading indexes.
But now, I want you to explain that, though, because as I say that, a lot of people could hear the phrase long-only, and they might immediately gravitate towards buy and hold thinking. But there's a fairly subtle and strong difference between the use of those phrases from a trend following perspective and a buy and hold perspective.
Absolutely. And that's something that I've learned recently. You say long only, and you immediately put yourself in an asset class with guys that are fundamental analysis and they're buy and hold, and that's not even close to what we do. We still take defined risk per trade. When we get into a position, I know that day where I'm going to sell it, whether it's a loss, and I know where I'm going to take profits immediately. Like I said, our average holding period is about a month. So that's the holding period is going to be a lot longer for the winning stocks, right? When you're trend following. So, we could get into a position today and be out of it tomorrow if it's a losing trade, and we could be in something for 2 months if it's a winning trade.
Well, speak to the idea of being out of the market completely.
There's a period, so we use some shorter term indicators to kind of smooth out volatility, like a lot of the CTAs do. And, when I say out of the market, I'll mean that from a long exposure side, we won't have any positions on. Mm-hmm. For example, it's 2012, in the 7% correction in the S&P last month, we went from 150% invested to 20% invested in less than 30 days. Complete opposite of buy and hold. Right? We're limiting downside, prices going lower, we get stopped out of a lot of positions.
What's the biggest negative thing that you hear from people that are either potential investors or friends and family when they hear about your strategy? What is the typical, it's probably typical, but I'm going to ask you, what's the biggest negative they immediately throw at you?
The biggest negative is that they'll go ask somebody else about it. They've got a financial advisor that they'll go ask him, what is this, and would you do something like this? And these guys immediately come back and say, well, why would you do that? It doesn't make any sense. These guys, they haven't been around long enough, and they don't have a long enough track record. And it's like, guys, we've been doing this for 10, 11, 12 years at some of the biggest funds on the planet. Now we're doing it for ourselves. And to hear somebody come back and say their financial advisor said that, they shouldn't do something like this, that they'll take care of them. Right, that they'll put them in, they'll find a good product for them. It's just, at this point, I kind of giggle at it.
Well, what people never really ponder is that guy that's giving that wonderful advice, the family broker, is he's just getting a fee. He's not giving you advice for free.
Yeah, essentially they're sales guys and they sell the products that they can sell. And, the other thing with people that we've looked at instead of institutions, this is new to them. They don't have a way to access this. Another gentleman asked me recently, I've been interested in having something that's more proactive like this for a very long time, but I can't, how would somebody like me get to this? And I'd say, you don't. The guys in the castle in Connecticut aren't advertising to you. They're not advertising to mom and pops. They just don't. It's an institutional world when you get to that type of dollar amount. And we've been at the point where we're letting people in for small amounts of money, and just because we know we've got a different product that we can offer to people that's prudent, and it's the way that they should invest, and it's what they should do, that they're not used to.
I got one more thing that I want to, before we start to wrap up here, I have one more thing I want to kind of go into. But I first want to let you give an opportunity here where you can, people want to find out more about you and your firm. Where's the best place to go? How can they find you?
Best thing, I think, go to the website, intrinsic.capitalmanagement.com, or shoot an email directly to me, Tony@intrinsic.capitalmanagement.com, and I'll be, more than happy to answer questions and talk to people and show them what we do, and whatever I can offer, I'd be happy to do.
Yeah, and for the skeptics out there, and I know I have a few of them, as I'm looking at this fine article where my butt gets nailed in Financial Times here in the last 2 days. As I say that, I'm not necessarily sitting here trying to sell Tony. I mean, look, this is an open system, okay? Yes, Tony is a capitalist. Yes, he's an entrepreneur. Yes, he wants to have a successful money management firm, and that needs clients. But you know what? We're also all people, and it's fun to communicate with like-minded people. It's fun to connect with like-minded people and to have good conversations. So I don't want anyone to be sitting out there going, "Oh, it's just an advertisement." It's not. This genuinely, we all like to connect and find like-minded folks. I think you probably agree.
Absolutely. No question, for sure. And that's why I offered it. I'm more than happy to talk to people. And, I'll talk to people that are skeptical as well. I've done this and I've seen it and I've worked at places and I've spun my wheels trading the other way. And this is something that that I know works because I've done it, and I can do this and I can repeat this for a very, very, very long time. Right? A lot of the guys that I've seen manage money are good until their last trade. They're good until they're no longer good. When you get a process like this, CTA has been doing this for 30 plus years now, right? There's obviously good times to do it, and there's obviously bad times to do it. But over time, these guys have had the most profitable track records that there are. And it's disciplined, it's decisive, and it's repeatable, and it's scalable. And to me, those are all extremely important things.
Let me end on something which is a little unrelated and more just kind of picking your brain too. And I don't have any emotion about it. I'm sure some people think that I am this mean, nasty person towards CNBC. I really don't. I feel I'm very lucky to have sat at the head of programming's table for CNBC for an interview, for programming a new show, to watch their process, to walk that floor up there in Jersey, to see it all, to have Maria Bartiromo leave a voicemail to me that sounded like she was kind of crazy. I'm kind of glad to have had all these experiences. And, but I think there's a larger issue here. Like I said, this is an emotional thing. It's just the onslaught of, and here you are as a systematic guy, as a trend following guy dealing with stocks, but the daily onslaught of information, fundamental information that can often be either aligned or contradictory, but just the sheer volume of it on individual stocks is mind-numbing. I don't know how people actually delude themselves to thinking that if they just get one more cookie, it'll help to make everything better.
It's mind-boggling, and it's only gotten worse. In the last 10 or 15 years, the capability of the information, and we've become so global now that you can't turn the television on at any time in a 24-hour period and not be hearing something about Greece or Spain or Italy or, you'll see it in my pitch books. There's no way possible for a human being to decipher the amount of information that's coming across the wires in an appropriate manner and use that to forecast the price of stocks, in my opinion.
And then even if you could forecast it, then when do you forecast the exit? I was watching it this morning. That's the number one problem, is they never tell you when to get out. Yeah. The guys stand on there all day long and they say, I like this stock, I like this stock, I like this stock. Things change, and things change quickly. When do you admit that you're wrong? Right? If it's at 20 and you like it, you like it at 18. We used to joke about this all the time. You got to really like it when it goes to 15, and you must love it at 4. Guess what? You lost money. Yeah. You lost money, or you're sitting in dead weight for a long time. I'd rather be in cash than be sitting in a stock for 2 or 3 years. It's just completely dead water. It's funny. I sometimes say to myself, and I mentioned it not because I'm looking for sympathy, but because I think it's more this article I mentioned in the Financial Times. I think it has less to do with me personally and more to do with the fact that, and this is very typical whenever trend following trading or CTAs or managed futures or your style of trend following and equities gets mentioned, whenever it does get a major mention in the press, it's usually this wholly negative kind of just like I just imagine, I mean, look, I'm a fighter, so I'm constantly ripping the media. Okay. So I guess it's not a surprise that if the media gets their opportunity, or they decide that I'm going to give trend following or this guy Coveil some space in the paper, we're going to rip him. But it's kind of comedy where it's like, instead of actually getting to the point where the things that you do in your world, the lessons that you've seen from Graham Capital, instead of all these things being ever presented in a positive light, it's always like, they got lucky during '08 or this or that, or it's you just shake your head, because it's like the vast majority of people are never going to get this at all, is my final conclusion.
I mean, I've got one last thing. I want to say it's one of the girls on CNBC who's interviewing the Winton Capital CEO, and these guys use no discretionary for anything, and he goes into a long spiel about what he does, and immediately after that, she asks him, "So what do you think of the Bund?" And
Right.
he looks at her and he's like, "You didn't listen to a word I just said, do you?" I just don't think they I don't know that they understand it, or that I just don't know.
But the great thing about David Hardy, though, is he does it in a distinctly British way. Like, an American might immediately say, "What are you? Are you brain dead?" But a British guy just kind of rolls his eyes and kind of looks at him, and very respectful. Doesn't say, "Hey, you're an idiot." It's
very polite. Yeah.
Like you or I be like, "What's wrong with you? Are you on something?"
Yeah. At this point, I just tend to smile and it is what it is,
Well, listen, Tony, I appreciate the time today. I'm going to let you run. I know you got to be places and keep up the good fight. But I think everyone's going to enjoy this. I think it's another great example of a journey. And, there's not necessarily an endpoint in these journeys, but, I mean, to me, I'm never envious of anybody else's journey, but because I feel like I'm on one myself. But when you hear someone like Tony explain this story and these unrelated dots, and handing out resumes, standing on Wall Street and not knowing anybody, I mean, maybe that sounds pathetic to you, but if it does sound pathetic to you, I would argue that you probably have not yet figured out how the world works. And you got to do something. I don't care what it is. You got to be creative. You got to be inventive. You got to make your way. If you when you look back and you're 90 years of age, do you just want to say you worked for the man? Is that all you want? So, like I said, I think Tony's journey is and it's just starting. I mean, you're in your mid to late 30s. So, I mean, we'll all pay attention, and we'll see if if you're out there at the castle castle on the ocean in Connecticut soon. So
that's the plan.
We'll all pay attention. So, anyways, I appreciate it again, Tony, and we'll talk soon.
All right. Thank you very much. I appreciate your time, Michael.
Take care.
Bye.
See you. I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash, or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@coveil.com. I will send you the right trend following steps to take, along with my free video. But if you want to buy and hold, trust the government, and trust Wall Street, this is absolutely not for you.